When you talk to customers, the one feedback that we constantly get is insurance is a scam.
Why do Indians want their money back?
The primary perception is that insurance is still an investment product, so people are still looking to get their money back.
The first thing is we select people not from the insurance background.
For us, the main thing is we make sure that we never give any targets. Say that you do the right by the customer and eventually the sales will come.
How can you deny health insurance?
Insurance works if you sell insurance to people who are extremely healthy.
Hello, and I am Hansi, and today we're talking to the founders of Ditto and Finshots, and they are building something very hard from scratch. Let's hear from them.
Rainmatter invests in fintech startups with the intention of investors doing better with their money, which we believe will also help deepen markets in India. Join us as we speak with the startups and venture capitalists who invest in them about how they are approaching markets, fintech solutions, in all subsectors of lending, payments, investments, insurance and infrastructure, as well as their businesses from scratch.
You are Shrehith Karkera, Lokesh Gurram, Bhanu Gurram, and we are missing Pawan, who is traveling today, right?
Yeah, he's traveling today.
And you were the founders of Ditto and also the founders of Finshots,
yes,
right? And we're talking about how you came into this journey. We'll talk about the backstory a little bit more, but I want to just dive right deep into the insurance part. As you explained, you got into insurance, but insurance is literally the hardest thing that somebody can do, partly because people say insurance has to be sold, not bought. Can you give us a bit of understanding of the insurance, maybe just for people who are not used to India or insurance, just to give a bit of background?
Right, so that's an interesting question, because I think for most people in the fintech space, anybody who's looking to delve into insurance, they believe that a pure product play would work brilliantly, right? So for instance, if you have, say, I don't know, 50 million users or 5 million users, you're thinking of using that captive audience and then selling insurance using a product play. Just have an insurance button on top, get them to buy insurance, and that's it. Because this idea permeates from the mutual fund industry. I mean, that's how mutual funds grew, right? You could buy a mutual fund, you could do your research, etc. Insurance, unfortunately, doesn't work that way. It's much more complicated, and the complications sort of boil down to the actual product itself. We look at how traditional insurers work, right? Let's say you want to buy a health insurance policy. It's a very elaborate process, right? You'll have to fill in the application. You'll have to make sure that you go through your medicals, and once the medicals are done, you have to make sure that all your paperwork is in order, and this could probably take 3 or 4 days minimum. With term insurance, this process could take up to 15-20 days. Now that's after you decide that you're going to buy a product. Before you buy a product, you have to sort of zero in on what product you're going to buy. And we're talking about what, 20-30 insurance companies, each one selling 3 or 4 policies. We're talking about 150 health insurance policies, maybe 20-30 term insurance policies, and suddenly the space gets incredibly complicated. More importantly, each insurance document is a contract between the consumer and the insurer, and these contracts have multiple, caveats and things that probably every customer should know. And that would also add into sort of the complicated aspect of insurance, right? So on a regular call with one of our advisors, you'd have to go through a litany of items. So this could take easily 30-40 minutes and multiple follow-up calls later. Imagine sort of condensing everything to a simple button and saying buy insurance. You miss out on all these details, and then when you have to eventually make a claim, you realize that you weren't fully talked through the caveat, so to speak. So I think the primary idea with selling insurance is, I do buy the argument that you have to sell insurance, but you can't sell insurance the way you sell other financial products. I think you have to adopt a very different approach. You have to adopt a very human approach, because ultimately you probably use the product once, twice, thrice in your life, and with term insurance it's just once and you're not going to be using it. So you have to make sure that you've made the right choice, and to do that I think you have to have a lot of human intervention. The question is then, how do you sort of scale this business and stuff like that? But yeah, I mean, it's complicated for these reasons.
Do you think when people start with that premise that India needs to get to this global sort of penetration standards, is that a correct assumption? Or do you think because the family structure is more important in India, most people, I think, live with their families until we get married, and even then sometimes we continue, right? Do you think, therefore, what do you think is the total addressable market in India for health insurance and life insurance?
I think it's very hard to say that, because especially with what we've seen in the insurance space right now, I think the primary perception is that insurance is still an investment product. Insurance is only a byproduct of the investment component, right? So people are still looking to get their money back, which I think.
Why do you think that happened? I mean, have you delved into the history of insurance products in India, and why do Indians want their money back with insurance?
I think it's this general. I mean, there are multiple reasons. And the first reason is that when you talk to customers, the one feedback that we constantly get is insurance is a scam. I mean, that's what people think, right? I mean, even if I pay my premiums and then I have to make a claim and you don't pay me the claim, ultimately it's a scam, and that's how the customers are going to.
Oh, and that's okay. So that's their perception.
Correct.
Have you looked into the insurance industry in India? I mean, is that perception that it's a scam, is that valid? Like, do insurance companies end up keeping all the premiums and not paying out?
I mean, if you look at the financials, you'd probably say that that's not the case, mainly because I don't think you have a lot of insurance companies that are extremely healthy, right? I mean, they are healthy, right? Because the regulator mandates that they have to keep a cushion in terms of the funds that they set aside for exigencies and stuff like that. But if you just compare the financials, you'll see that perhaps they're not making as much money as you would expect them to, right? I mean, it's the same thing with hospitals. People think that they're getting scammed by hospitals, but if you look at the financials of most hospitals, you'll see that they're bleeding as well.
Right.
Now, for instance, with health insurance, if you look at Star is I think the biggest health insurance provider in the country, and you look at the financials, I'm not sure if they're still in.
They're making profit, but they're not really huge.
Yeah, I mean, it's not going to make investors blush, right? I mean, it's not going to make them think that Star is going to be the next massive multi-bagger. At least that doesn't seem to be the case.
Right.
I think what the issue here is that people are trying to, this under-penetration business. Now, the objective for insurance companies is to try and reach every nook and cranny, right? And what that happens is when you put that kind of pressure on a market that's perhaps not as aware about insurance, you're going to sell insurance to people who desperately need it. But insurance doesn't work that way. Insurance works if you sell insurance to people who are extremely healthy, who don't need it in some sense.
Right, you need big groups, right?
You need big groups and healthy groups so that you can subsidize the costs associated with insuring the less fortunate or the less healthy. And that's the only way it'll work. So if you can't find enough people that way, you're going to run into this unmitigated disaster where you're running an insurance company and constantly bleeding money, right? So my sense is that with insurance, the companies are desperately trying to push products, but in the process of having this agent pyramid structure, they're just pushing these products to customers who either might be more likely to make claims, and thereby they bleed money, and thereby they have the issue with not honoring the legitimate claims as well. So you get the whole problem of customers venting out their frustration. So I suppose the best way to actually improve insurance penetration is not to look at that 4% number, because then you're just going to sell insurance to people who, like I said, are only going to buy it because they have a pre-existing health condition. That never works out profitably. I think the idea is to find a group of customers that can spend money, who are healthy, and make sure that they're aware that the black swan events, the risks that they don't see coming, could be insured. And so you'll have a large group of people who are relatively healthy, who have high spending power. You collect higher premiums, and then you can perhaps go and sort of insure the under-penetrated market in India. I think that is perhaps a more sustainable approach, but it's not an approach that will see you making scorching growth. Right? So
isn't that like why large brokers like Marsh go for group cover, right? When you go to a large Infosys or large company with thousands of employees, you pick up the whole group, and therefore you get hopefully mostly healthy people with some, right? That would be the way to go. Shouldn't sort of government schemes, or maybe the NPS, the new pension system, for example, wouldn't that be a better idea to get large masses of people insured in one go? Wouldn't therefore group cover be a better sort of solution?
I suppose it would, but I think that would also take a lot of initiative from the government, because I was just reading a report on the Ayushman Bharat scheme, and Ayushman Health scheme, and I quickly recognized that again the problem of making sure that you find the right kind of people, right? So I think the scams alone totaled up to, I was reading the numbers, I don't remember the figures.
What's the issue there?
So basically it seems that people who don't who don't live anymore were also claiming the benefits, or people without Aadhaar cards, duplicates, etc. Right? So just weeding out these things alone could help, but it's a much bigger challenge than the government originally assumed. So it seems that even those schemes have their own issues.
Right.
And now with group cover, when it comes to employees, I think
that's the thing, right? So when you assume that groups are by default have bigger size, etc. But I don't think all these corporate etc. still have big enough size to cover. Like almost most insurers prefer to sell retail plans over group plans because they have a lot more margins, etc. They actually make a lot more money, because in the group what happens is you need to continue kind of renewing the group, etc. And over time you get a lot more losses, like you kind of keep up with it. But if you take corporate plans, right, so one of the things is people insure their parents as well, like who are generally aged parents, right? So that's really beneficial for the employee because the parents get covered, etc. But for the insurance company, they're not able to kind of charge that much of extra premium. So for them, it's like a kind of negative margin business. So they're not really very keen on that.
Is the parents clause or rider very Indian thing again?
Yeah, so again, the whole parents thing, and even I think many companies even offer the in-laws thing, right? Again, the whole thing is completely kind of, I think, the whole Indian family structure, and that's where it works, right?
But also, I mean, the reason group cover doesn't work in India is because only 90% of the population, actually 89 or something, is informal, and only 10-11% is formal economy. That was why the NPS got started, right? So part of the group cover issue might be that also. But from what you're saying, quite contrary to the perception that insurance is scam, actually it's the people who are getting insured that are scamming the insurance companies.
I think there's a small subset, but I think the amount of damage that they sort of inflict on the insurance companies is substantial, which explains why you have so many clauses in the first place. If you read a simple insurance contract, you'll see so many clauses that I'm pretty sure that every insurance company can always find some ground to deny a claim. That's not to say that that will work with when you sort of approach the courts, etc. In fact, the courts have consistently sided with the consumers, even when there's legitimate ground for the insurer to deny a claim. And we've seen this multiple times. The problem is, I was just recently reading about a case that was, I think, initiated in 2009. Concluded in 2022-2023. Obviously the court sided with the customer, but you're talking about 13-14 years, right? And waiting for that, after having paid 3 or 4 lakhs in claims, right? And then you realize, okay, I got the money, but what good is it for? Okay, you feel a sense of justice, but waiting that kind of time simply, I mean, it feels like you're being betrayed, right? And I think people feel betrayed by the insurance company. The insurance company will argue that we are being betrayed by this small subsection of people, and obviously it's like a chicken and egg problem, right?
Right. So there are issues, as you said, both sides. One of the issues is obviously that the medical people with pre-existing conditions, they can get away with hiding that condition, even though you ask for a medical. You can get reports. I mean, people got vaccination certificates and stuff, right? So anything can be done in India. So part of the reason seems to be that. Is that fair?
I think that is.
Whereas I think where I lived overseas, I couldn't, whichever doctor I went to, my visit was recorded in the central system. So always the medical system was aware that I did have this sort of issue. Having said that, the flip side, how can you deny health insurance?
That's not, I mean, let's say they find some cohort where they know for a fact that it's not going to make any money out of it. So it's a private company, end of the day, choosing to make money out of this, right? So you can't really force them that you have to insure this customer.
But then therein lies the problem. As a customer, now I'm very turned off because yes, I may have I don't even have the disease. I may have some remnant of something from 20-30 years ago. The reason I want to insure myself is I could die of an accident tomorrow or have or health issue because of that. So because of a disease, you're now denying me an accident, right? So, I mean, it seems like the insurance companies are picking and choosing what they want.
It seems patently unfair. I mean, I get it, right? I mean, I think my father was denied insurance because he had a pre-existing condition, right? So he can't be insured anywhere else. My only option is to go for corporate health cover. And we routinely see customers who probably had cancer in the past and now they're in complete remission, but the insurance companies won't touch them with a barge pole, right? They're not going to do anything.
Not for anything, not even for accidents.
No, nothing. Right?
That's what I'm saying. How is that?
I completely understand. From a consumer's point of view, it feels, it feels like I mean, ignominy in some cases. But now, if you were to actually look at what happens to the insurers, let's suppose I decide I'm going to insure you. Now, to compensate for the risks associated with your condition, the pre-existing condition, or even if you're in remission when it comes to cancer, a single cancer claim could add up to 20-30 lakhs in a tier 1 hospital, right? So now I have to bump up your premiums, right? But your premiums won't compensate for it. I can't charge you 1-2 lakhs in premiums and then expect you to pay. That won't work. You'll probably be even more turned off by the simple prospect of having to pay that kind of money to be insured, which means then I have to increase the premiums for everyone else. So my book in itself turns ugly. I have to ramp up the premiums, and that means, you know, say a pensioner in his 60s who's now expecting to pay 20,000 suddenly has to pay 35,000 rupees. And that feels unfair to those people. And suddenly you have this problem, this contagion that spreads from one source to multiple people, and everybody is upset. In fact, just a couple years ago, we saw massive hikes in sort of these certain age bands, right? So 60 to 65, you saw massive hikes, about 30-40%. And everybody was upset. People were talking about, how can I even afford these premiums? I was promised a premium and now you're asking me to pay what, 40-50% higher? How can I afford it? One of the reasons that happened was because of COVID. And so we had massive claims coming in. They realized that perhaps their risk models weren't as robust. Suddenly they had to bump up premiums. Now if you start insuring individuals already with pre-existing conditions whose claims could total up to 10, 15, 20 lakhs, and you distribute it around a population, because these people will want insurance. They're prime target, right? They're going to buy insurance, and all of a sudden you're looking at a massive problem, not just for the insurance companies, but also for people that are buying insurance, right? Because their premiums are shot up. So this is a problem that companies are trying to mitigate by making sure that they only sort of insure certain conditions, like you said. If I have cancer, okay, exclude all the conditions associated with cancer. How about you cover other things, right? Diabetes, etc. That way the premiums won't bump up, etc. And things like that. So insurance companies are trying, and the regulator is also helping in that regard. But it feels unfair all around, and I'm not sure how we sort of get past that.
Let's talk about other issues with insurance, which is basically the distribution.
Okay.
Everyone knows LIC as a brand. They have what, 3 million odd agents, I think?
More than that.
More than that, yeah. So okay. So paint me a picture of the distribution landscape of insurance in India, both health insurance and life insurance. How does health insurance sell, and how does life insurance sell?
Life insurance, primarily you only sell endowment products and sort of ULIPs.
It's mostly sold as an investment plan. It's never sold as an insurance plan as the primary product, right? It's just that a typical way an LIC agent would probably sell is you collect say 500 rupees from them every month. That's it, because a normal shopkeeper would be able to pay you or would be able to afford only that much. And then they promise at the end of 10 years for your daughter's education, you're going to get this corpus. So it's mostly sold as an investment product backed by the government, but never as a death benefit, right? All these products have an inbuilt death benefit, but that is not the primary reason for purchase of any of these products.
What do you think the insurance regulator, what do you think they are doing or could be doing better to sort of solve both the distribution issue and the product sort of suite issue?
I think insurance, IRDA has done a pretty terrific job in terms of just helping to improve penetration in India, right? I mean, even things like these corporate agents, for instance. I mean, as a corporate agent, you could only partner with say 3 health insurance companies, 3 life insurance companies, and 3 general insurance companies. You've limited sort of the pool of companies that you can partner with. And once there was representation, immediately they said, you know what, to improve insurance penetration, perhaps we should offer more choice. And immediately they came up with a draft paper, and then now it's law. You can actually partner with more than 3 insurance companies on each department. Even when it comes to things like Bima Sugam, for instance, the insurance.
What is that, sorry?
Bima Sugam.
Okay.
So it's a new platform that IRDA is envisioning to make sure that every player, that could be a corporate agent, insurer, everybody is on one platform, and you can avail the service. You can pick and choose what you want. So if you want to buy an insurer directly from the insurance company, you can do that. If you want to buy it through an agent, you could do that. You could do anything, right? It's a single platform that will sort of bring everyone together, all the stakeholders involved. And they're trying to, I think the deadline was set in August. Couldn't happen, but I think the objective is to push it maybe, early next year or something of that sort. I mean, these are things that you feel like, okay, the regulator is now looking at this space and saying, you know what, we can actually improve penetration significantly in India over the next 10-15 years, and I think they've done a pretty good job, at least if you ask me. What could they do better? I think I'll defer to probably Bhanu or
No, I think even in terms of the product launches, right? Previously, an insurance company has to first file the product with IRDA, wait for their approval, which again would take probably 6 months to 2 years, and then they can kind of publicly launch. Now they flip the model and they say that you can go ahead and they've set up few boundary conditions. As long as the products are falling under that, you can start using it, and then you file it with us for an approval, right? So this makes for the insurance companies also much easier for them to go out and launch any new product or any new version that they want to get into.
Right. What about the distribution or the agency force? I mean, do they actually understand the insurance products when they're ready to sell?
Not really. Not. I mean, not to the extent
like any other industry, right?
Yeah, pretty much. I mean, if you go through the course, also it's heavily textbook heavy. Not really. I don't think it's updated in time recently with the latest products or whatever it is. It's been like heavily kind of outdated. But that's the bare minimum job. But
right. And what's the commission structure? Because obviously insurance is one industry that gets accused of mis-selling all the time. So paint me a picture of where the insurance commissions are at right now, and is the regulator doing the same thing like what the investment regulator has been doing in terms of bringing the gaps down?
Yeah. So again, the commission structures varies with respect to which product you're kind of getting into. And right now the entire industry is IRD is also implementing few changes in terms of how the entire commission structure should come in, right? So the new structures and other things are yet to come out. But usually, say for a health insurance product, you can get up to 15%, 15%
15% of the premium.
Of the premium.
Of the first year premium.
No,
of every year.
Of the every year premiums as well.
Right.
Because health insurance, the renewals are also commissioned at the same level. Whereas for a life insurance products, you have a higher premium in the first year. The subsequent years, you have a very minimal commission that is coming in.
And how much is that for the life insurance?
Life insurance, again, it would vary from 20% to 40%, depending upon the product, whether it's a pure term insurance product, an endowment plan, a ULIP plan.
Okay.
It depends on that.
And how do these commissions compare with global standards?
So our commissions are definitely on the higher end.
We're on the higher end.
We're on the higher end, definitely.
Right. Do you think that's a state of the development that we are in?
I think that kind of required, because right now, even for the agents, etc., to get the sales, etc., like you need, you incur a lot more expenses because you need to spend a lot of money on awareness, etc., right? And which is not the case. So basically, the pull part is still not very much developed in India yet.
Right.
So.
But for a person, I mean, realistically, can a person be a full-time agent as a career option? Is that kind of...
they can definitely do it,
right.
but might not be very viable in the initial few days. Right? I mean, until you build a book, or unless you are a person who has a lot of contacts. Where, I mean, because the whole offline where the agent-based selling happens really on the basis of I know this person, or I know he's my relative, etc. That's how it happens. Like unless you have a very big network, etc., might not be very flexible in the initial few days. But once you set up the book, etc., then definitely the trailing commission would help you.
Right. And does the regulator also do like massive campaigns like what the SEBI has done on mutual fund Sahi Hai? Does IRDA do massive education campaigns?
I've not seen as many.
I saw something about insurance pehle or something like, I forget the tagline
but
also.
perhaps not as sort of impactful as the mutual fund Sahi Hai campaign.
Why do you think that is?
I'm not entirely sure. I think what the regulator is trying to focus on is primarily because look, the product will sell itself if you bring down the premiums. Right? I mean that's one of the if you ask the insurer will simply point to that problem. They'll say, look, awareness is key, but then again, I think the bigger issue is that we have to make sure that insurance is more affordable to people, right? And to do that, they have to work backwards, right? You have to figure out how the commissions are structured, which is why we've seen some radical shifts in how insurance companies can now pay commissions. You have to make sure that the insurance company have healthy books as well, right? You have to make sure that they're insuring the right kind of people. They have the room to grow because let's suppose you have an insurance company that's consistently bleeding money, it can't grow. I mean, you have to sort of scale back, right? So I think they're looking at that and they're trying to figure out how do we fix systemic problems within the insurance industry so that we can do something to bring down the premiums, because then I think awareness will solve for itself. But I agree with you, perhaps some degree of awareness campaign will still...
It's like a chicken and egg, right?
Yeah.
I mean, yes. Okay, enough about the insurance industry problems and issues. I'm still amazed that you then still, after knowing all this, well, did you know all this before you went
No.
Aha, so then leads me to, you then decided to focus on insurance and maybe a little bit of intro of what Ditto does exactly.
So Ditto is an insurance consultancy platform, an advisory platform as we like to call it. Because I think when we looked at the insurance space, we realized that there's a massive gap there. I know we weren't entirely sure how we were going to build the business out, but I think one thing that we did notice was, especially in the online insurance space, we saw that 90% of all products are sold by Policy Bazaar, right? And we felt like there was an opportunity there, right? There's this, you could probably have more competition. And we're trying to look and see why there was no competition. And I think what we realized were two things. The thing that we spoke about earlier when we said insurance isn't like other products. You have to sell it, but you have to sell it a very, there's a specific way to sell it. You need somebody to tell, the customer that everything's going to be okay, right? I'm here for you. And you have to have a human touch. And I think when we were looking at the space, we realized that we should probably be doing more of that, right? Empathy, right? Making sure that you empathize with the customer. Even if you know that the insurance company cannot offer a plan, make sure that you let the customer know why it's happening and see if you could do something else for it. And I felt like there was empathy missing in the whole value chain, right? And that starts right from, when they collect your number, right? Insurance companies or general insurance aggregators collect your number, and there's indiscriminate calling, right? Day and night. And we felt like that's not a nice experience. It's not a pleasant experience for anyone. So we looked at that, these couple of things where we said, okay, there's a market here, and then people aren't having the best experience. Perhaps we could do something about this. And then we added the advisory angle where we said, listen, we're not going to focus on selling, right? Selling will happen as a consequence of good advice. So we're going to help we're going to try and help people be better informed about the product that they're buying. So each call that you have with our advisor can last anywhere from 30 to 45 minutes. Right? Since during this call, we intimate them about these caveats of every insurance product. We walk them through certain important things, the waiting periods, the fact that the insurance application could get rejected, what we can do in such cases, and how the claims process works, etc. And then we ask the customer to make a choice that they feel comfortable with, right? If they don't want to buy through us, or if they want to buy from the insurer directly, that's okay. We're not going to spam them. We're not going to harass them. We're going to treat them with empathy and see if we can still work out a business model. So that was the original hypothesis. Luckily for us, it's worked out brilliantly because we've come to recognize that if you can treat customers with respect and dignity, they also treat you with respect and dignity. They're not going to buy the product from the insurer directly because they feel like they can still derive more value from you. So yeah, Ditto is an insurance advisory platform, and we primarily help people better understand health and term insurance products, and if they want to buy the product through us, they can do so, and we make a small commission on every sale that we generate.
Right, okay. So you call yourself an insurance advisory platform.
Yes.
Yet your license is
Yes.
that of a corporate agent.
Yes.
Right?
Yeah,
I believe you did apply for an insurance broking license.
Yeah. And yeah, I mean, that's when the regulator sort of swooped in and said, we are sort of expanding the ambit of what a corporate agent can do. We are going to let you partner with more insurance companies, because that was a challenge for us. And we felt like a broker's license would afford us more legroom, right? But once the regulations sort of changed, we didn't see that there was enough benefit for us, because we only do health and sort of term insurance, and we didn't want to delve into more products, and it felt like the corporate agent license would offer us enough legroom and more to do what we intended. So we sort of gave up that process in between, and we said we're happy with the corporate agent license.
Walk us through their business model now. How do you make money?
Yeah, so the way it works is we're going to tell you what policies you could potentially buy depending on your profile, etc. We walk you through everything that is embedded in an insurance contract. We help you educate everything, so you can just book a free call with us. We talk you through everything that you need to know. You can schedule multiple follow-up calls, and if after our conversation you feel like you want to buy insurance, you can buy it through Ditto. And when you buy the product through Ditto, we get a small commission. Now, one of the questions that we almost often get is, isn't there an inherent conflict of interest there? You're simply going to sort of sell a policy that's going to yield the highest commission. And that's a very fair question, because that's what I would think if I were a customer as well. The thing with us is that we are an online only business right now. We don't do offline sales at all. And I think our second biggest customer acquisition channel is referrals, right? So we primarily rely on word of mouth, just like our investor Zerodha, to grow the business. And for us, one bad review is tantamount to sort of, everybody panics, right? Everybody panics what happens. So in the short term, it could be incredibly lucrative for you to sell a product that will yield the highest commission, but that plan will fail within the next 1 or 2 years, right? Because immediately customers will recognize that they were duped, right? So it's not a very sustainable long-term business model. So even though I understand that customers are always worried about the fact that there is a conflict of interest, you're going to sell a policy, we try and only sell policies where we know for a fact that the customer will have the greatest benefit, right? Because otherwise, this chap is probably going to go out and say, listen, I had a terrible experience with Ditto, and that's never going to work for me, right? My business model will break. So yeah, it's a simple commission-based model, and we make money on every policy that we sell.
Right. Interesting that you say that if you don't provide good customer service, that your business will break.
Yeah.
But for the life insurance companies or the general insurance companies, about 25 of them, and you're only working with 9, what is happening to the other sort of 15 odd companies? Will they not break? I'm curious as to why you think that you can keep your conflict of interest sort of manageable and the others don't.
That's an excellent question. I mean, if you look at, there's this idea about how insurance companies change when somebody does something different, right? For instance, before we had online comparison websites, right? Price comparison websites, insurance premiums were very high. And once you had the comparison website, and Policybazaar sort of institutionalized this and they put everything together, suddenly you saw premiums drop because now people could compare prices. And so until then, nothing happened to the business model because there was no discovery.
Right.
They didn't have an alternative.
Right.
So we feel like once you introduce an alternative that is more empathetic, and that also explains why within just 2 years, we've actually grown considerably, right, in terms of size and scale. We've done that because now there is an alternative, and all of a sudden people recognize that if I can get this level of service, why can't I get it somewhere else, right? It doesn't have to be this way. I can actually get a product, I can buy a product, I can trust that the agent is doing right by me. And that's not to say that we're the only ones doing it, right? You have a lot of individual agents, for instance, even LIC agents, right, who are doing right by their customers. It's just that it happens in small pockets and it doesn't happen at scale. So you never hear about them. You only hear about the bad stories, right? You only hear feedback when it's negative. You don't hear the positive feedback by and large. So I feel like if we were to scale this business model really well, I think more companies will look at us and say, you know what, we should probably be doing more of that. Just to give you a small example, we came up with the no spam policy, right? We said, I'm not going to spam you, right at front and center of the website. Since then, at least 2 insurance companies and 1 aggregator has chosen to also introduce that tagline. Whether they do it or not is a different matter, but at least they've introduced it. So I think once you start doing something like this, you realize that everyone else will follow because they recognize that customers are now privy, that, oh, this is a possibility as well. And I think industry patterns slowly shift. We're not at that scale yet, but hopefully we will be in the next 5 years.
No.
So let me just sort of run through. So you first did a comparison of all the sort of policies, and then you educate them, and then you advise them specifically on which policies suit them. Is that kind of the sequence that happens, right?
Yeah.
Okay. So I, as a customer, can browse your site and compare policies
By yourself.
Yes, you can.
by myself,
yeah.
and look at my policy that I already have and see whether it's good or not, and all that in this, taking my time.
Yes.
And only when I'm ready to buy something or talk
or
to
you
you.
just want to talk about the insurance product itself, right? You want more details, etc. You want to know about your pre-existing conditions, whether you'll be insured, etc. So there's many other questions as well. Then you can come to us and we can have a call.
So even if you want to, if you have the time and the patience, if you spend enough time on Ditto's website, even if you have no background in insurance, you can understand everything about it. You can browse through all the plans and you can shortlist a plan for yourself.
Right.
It's just that at the end of the day, people are not that confident about the choices that they make because insurance is probably you'll buy it once, right? You may not have the expertise or you may not have the confidence to go ahead with it. And on our website, you'll find everything where we don't even ask for your email or phone number. You can just browse through and we won't even know who browsed through our website.
Right. Which leads me to the tech of fintech. Okay, so until now we've discussed the finance problem, which is insurance. Now let's just discuss how you applied tech to this. So even though your USP seems to be empathy, no spam, how did you use tech in solving this?
So yeah, I mean, like we discussed previously, right? I mean, productizing the insurance is something that we know for a fact. At least we believe that it's not going to work anytime soon. So for us, most of the tech efforts we do is how do you kind of enable these advisors, the advisory team, to do more of what they do in a much more efficient way, right? So that's why 90% of the entire tech team's bandwidth goes into building these internal tools or internal process in place where the advisors can kind of Previously, we were able to handle like 4 or 5 customers in a day. Now we are able to handle like say 8 or 9 customers in a day. Or previously, if it is going to take 10 minutes for you to kind of generate the premiums to share with the customer, now you can do it in less than a minute, right? So our most of the investment is kind of as an enabler. It's not going to be like a tech first where the product solves for everything, because we want the human to be the point of contact to do everything, and we want to make sure that the tech enables them to do in a much more efficient way. Right? That's where things happen.
So if I were to summarize, your customer intervention is very human touch, but you enable the advisor in terms of their education, their training, their quote getting and all of that, so that they can give better advice.
Better advice. Right. Basically, we give right information to the advisor at the right time, so that they can take care of the customer much more promptly.
Okay, so talk us through the advisory team. I mean, are they all on salary? Because a bigger issue, training is one issue, which we talked about, but also incentives is another issue, right? So how do you solve that?
So one of the main things we have, which is kind of radical in this industry, is we don't give any targets to anyone, not even sales targets, not even marketing targets, no one has any targets in the company. I mean, we kind of figure out what works, what do we need more of, what do we need less of, but we don't give any targets, because the moment you give some targets or you're after them, in that you have to meet this monthly number, weekly number, etc., they are either pressured or incentivized to kind of go after the wrong customers or sell the wrong products, somehow do it, right? So for us, the main thing is we make sure that we never give any targets, say that you do the right by the customer and eventually the sales will come. And also we kind of take a lot of effort in kind of highlighting these good virtues in advisors. Right? I mean, let's say someone did something really great, nothing to do with the sale, like let's say they advised someone, they went out of their way to kind of help the customer with existing policy and everything. We kind of really highlight it among the team, showing, okay, this is what we care, not that you are bringing a lot of money to the company, that we don't really, I mean, that's secondary, but this is something that we really care about, right? And also the way these incentives work, etc., for these people, there are some incentives, but everything is kind of flat structure, like there is no incentive for anyone to upsell anything.
Okay, so firstly, they're all salaried.
Yeah, everyone is salaried.
Okay, so that's the bigger sort of thing, that you are taking it on your books, that you can pay these things. And just so we understand, how do these people differ from the agents? I mean, in terms of qualifications, in terms of how you select them, what training they undergo?
The first thing is we select people not from the insurance background, because it's kind of difficult to let go of the baggage. No, it would have happened because of, by nature, right? You are already trained into the way existing things are. Second, we get people who are really, really smart. I mean, our selection rate right now is 1 out of every 100 people who apply at Ditto.
Okay.
The usual training program that the industry follows is 1 week on health insurance and 1 week on life insurance, whereas we spend 3 months on one product.
On health insurance?
On health insurance, yeah.
Okay, so one product meaning health insurance and 3 months on life insurance. So 6 months training.
Yeah, so again,
before they see a customer?
No. We first get them on one product.
Okay.
Once they're good enough, maybe say 9 months down the lane or 1 year down the lane, then we get them to the other product.
Okay.
So we have a 2 to 3 weeks of a classroom training program. Then after that, once they start talking to any user, right, it is completely shadowed by a senior advisor in the team, so that we ensure that they're not mis-selling and they're not making any mistakes or giving any misinformation to the user. So the entire training process for us takes 2.5 to 3 months, so that we monitor literally everything that they do, at least in the initial phases, until they're fully trained.
And how old are they, talking through the demographics?
So we have people who are 22 years of age.
So you take freshers basically?
Again, we don't have any capping.
You don't?
No.
A 60-year-old can apply? Say my mother wants to apply?
Yeah, if she,
so
if she can.
No age, no bar, and male, female split, anything?
No. I don't think we even.
So we rarely check. So the only reason why we.
So how many women do you have?
So for the entire team, it would be 40-60.
40 women.
40 women, 60
40 women for the whole Ditto team.
Yes.
And an advisory team?
Advisory team probably 45-55.
Okay, so close enough to sort of thing. Yeah. And how many advisors do you have?
We have a total of 125 advisors.
Right. 125 advisors?
Yeah, right.
Okay. So your website mentioned 30 somewhere, so
obviously
growing, it's out of date. Right,
and
okay.
we've hired like probably 60-70 of them in the last 3.5 months.
And what sort of salary would they get? I mean, could this be a career option for a young fresher?
Yeah, a lot
median
of
income.
So a median advisor can make around 48 to 50,000 a month.
Okay.
Yeah, and
it's work from home.
Yeah, and it's work from home.
Okay. It's work from home.
It's all work from home.
We want them to work from home because it's kind of works out better for them, rather than spending 1 hour in Bangalore traffic, they can probably, spend the time with their family.
Right.
Yeah.
Okay. So we are sitting in Rainmatter Capital sort of headquarters or incubator, if you will, and your office is right here, right?
Yeah.
So how many people do you have here?
Here we have around 40 folks.
40.
Yeah.
What do they do? What's the split?
So the entire tech team, tech, marketing, the central teams are here. So we ask only those folks to come to office where we believe collaborative work is necessary.
I didn't hear any tech in hiring and training them and empathy part. So where is the tech coming in at all? I mean, is it literally where?
I think that's one of the things I keep saying, that if you build some really good product, you never talk about it because it just does everything behind the scenes.
Right.
You don't really have to kind of notice that it's happening, right? So
Right.
that's where it is.
So it is. I mean, do you believe? I do that tech should disappear, right? Every company is a tech company. In that, tech should enable.
Yeah.
Is that kind of what you're
I
saying?
think that, I mean, tech is like every function that we do, we kind of use tech as a main enabler to do a much more better way. For instance, let's say we have an entire team which advise on WhatsApp. I think almost 30% of the business happens through WhatsApp as a primary channel on how we advise, right? So we have our own internal product which will support multiple advisors kind of handling customers, kind of generating the insurance premiums, scheduling the follow-up and everything. So all of that is built in-house, but again, it's like a base tool that will enable the advisor to do something to the customer. Yeah.
Do you calculate or do you get the premiums from the insurance companies?
So different insurance companies kind of do it in different ways. Some insurance companies literally give a dump of all the files and say, okay, you can calculate. I mean, they give the logic, and some companies we do it via integration with the API. So we do it with them.
Do you onboard the customer?
So the whole purchase journey happens on the Ditto. I mean, Ditto
On
journey,
your platform.
on that platform.
So they sign the application form for the insurance company on your platform.
Yeah.
Right. So they don't have to deal with the insurance company at all.
No, I mean that's one of our value proposition, right? That we'll offer them better service, which means that all the back and forth, and oftentimes you don't get a response from the insurance company because as an individual customer you have no leverage. We have leverage, so we use that leverage to make sure that our customers get a better experience. And yeah, I mean mostly that's also a big role for tech. How do you make sure that you work with legacy insurers with very different processes, and you sort of put all of that together to make sure that the experience is seamless for customers.
Right.
So yeah, that's a massive enabler.
Okay.
And even just another thing on quality, I think Lokesh probably forgot it, right? I mean, we have an emphasis. I mean, empathy is one thing, but you have to make sure that when your advisors talk to customers, that they do so in a manner that is that is consistent with our training material and with what the insurance documents state. So we make sure that we use AI to sort of transcribe all the conversations and make it easy for our quality folks to just parse through everything and make sure that everything is in order.
I meant to ask you that you don't do video calls?
No, phone calls.
We do phone calls.
Achha, okay.
If a customer insists on a video call, we can sort of enable that. But primarily, most conversations happens on phone calls. Again, we've observed that to be a customer trend in that most people prefer to just talk on the phone and not appear on video.
But then you transcribe the call.
Yes.
You still have to get the customer's permission for that?
Yes. So we have to make sure that we intimate the customer that every conversation will be recorded, not just for the transcription, but also to make sure that we have records to show IRDA, right? Because IRDA mandates that we have record of every conversation so that there's no mis-selling and all of that.
Right. And have you found any mis-selling in all the years you've been doing this?
Very rare. I mean, I don't think
so. I think we found a couple of times and we had to let them go the same day.
Is it because, what was the reason of why they were mis-selling?
Again, I would say greed.
Great, yeah. What interest would it serve for me not to
you
give
have
that
an
information?
incentive structure. It's a flat incentive structure that doesn't have like it's not incumbent on the premiums that you generate.
So usually the kind of mis-selling that happens, right? One is at a product level, second is at a premium level.
Right.
Say for example, you ideally need a 10 lakhs cover. Now let's say a 10 lakhs cover is for 10,000 rupees. I get, let's say, 100 rupees out of it. Now if I just fearmonger you and sell you a 20 lakhs cover, probably I'll make 200 rupees, right? So we avoid this kind of a mis-selling with a different incentive structure. So irrespective of whether you sell a 10 lakhs cover, 20 lakhs cover or 50 lakhs cover, you probably will get the same kind of an incentive here.
Right.
Second, to avoid any other sort of mis-sellings in terms of waiting periods or withholding any information, we run these quality audits and we call these things as a blunders. So you have like 2 strikes. On second strike, you are let go.
Okay. And you make it good with the customer.
Yeah.
Right.
So we try and sort of intervene on the customer's behalf, and we try and see if we can do something. And just going on the incentive bit, I think one of the reasons why you still need incentive is because it also acts as a good driver of service. Should you offer incentive to drive mis-selling, or should you offer incentive to make sure that the service actually lives up to the claims that we make on our website? And walking that fine balance is always it's a tightrope, right?
And what's the career path for them? Like why, like 2-3 years later, I'm sure they'll get bored. In fact, if they're anything like a current 22-year-old, they probably get bored in 6 months.
No, that's actually very true. And I think the kind of people that we hire generally seem to be people who are starting off their careers, right? So we're putting together something called as the Ditto management program. It's sort of, again, a throwback to what we learned in our MBA, right? Once you go into a company, you sort of have a 2-year training period. And if that doesn't happen, obviously we prepare them for life outside of Ditto, right? So the objective is to get them ready in the next 2 years if they join us, and then see where their path takes them, right?
So you will have attrition, obviously, then.
Of course.
So training is an ongoing thing. Yeah. I want to talk about another part of mis-selling is basically getting the customer to start with, which is basically top of the funnel. So talk me through your marketing and sales process.
Yeah, that's another very good question. So I talked about no spam. Just not spamming. I told you how other insurers have now sort of made it like a brand tagline to not spam, and yet they don't seem to achieve the same degree of success. It's because while it seems like a very simple value proposition, to actually implement it is incredibly hard. The first thing you have to do is obviously you have to hire freshers. You have to hire people without the baggage. Freshers, by that I mean...
So no insurance
background. Yes, no insurance
background. Or any kind of this pushy sales
background, right?
And just finishing on when you said hiring them smart people, do you do some sort of temperament testing or personality testing that they're not pushy people?
No. I mean, so we have 5 levels of interviews.
Oh wow.
So at every level of interview again is taken by a person, right? And we kind of evolved, or we kind of have certain questions with which we judge how patient they are, or so the major part we focus on is, are they able to simplify and are they able to patiently explain things to people? Right. Because the main part that our advisors do is educating the users, right? The selling or the rest of the things come much later. So we screen people if they're able to understand insurance. One, they're not from the insurance background. So if you're able to understand insurance and explain it to me in a simple language, which means that you probably are smart enough and you're patient enough to go ahead. And in the 3 months training program also, right, we keep screening them for all of this.
Okay. So out of 100 people who go through training, how many actually make it?
80.
Okay, so 20 of them you don't hire.
Yeah, so we do all of our filtering in the first stage, right? So if we get in 100 applicants, we probably select 1 applicant. Which means that our filtering process is very thorough, so that we don't have to, because training is very intensive for us. It's a 3-month training program. If you have to let them go in between, it's a massive cost head. So we do the filtering there, and obviously that's a problem because we've not been able to hire the way we wanted, which explains why if you go on Ditto right now and you want to book a call and you have a conversation with our advisors on WhatsApp, the waiting periods, right? You just have to wait 2 days.
How much is the waiting period?
Right now I think it's 2 or 3 days, but it's been one, when Nithin tweets about us, for instance.
No, usually I get a call back within 2 minutes.
Yeah, I mean, it's a terrible prospect for us because obviously that means we're sort of, our quality of service obviously goes down, right? If I'm making them wait for 2 days, 3 days, 4 days, that's not the kind of service that we want to have. But it's also byproduct of the way we've set our sort of hiring structure, right? We're trying to refine it, we're trying to scale, we're trying to do more branding on that end, so that we are seen as a prospective employer. And we're hoping that we'll be able to solve it, but yeah, I mean, it's unfortunate that people have to wait, but we're getting there. We're trying to fix.
Okay, we'll talk scale, but talk us through your top of the funnel. How do you get people onto your site to start with?
Right, so we've always been a content platform. We started off as a content company. We started writing stories. That's our bread and butter. And I think we were one of the first few people to really focus on putting together a newsletter and putting together a social media presence, just talking about finance as a company, right? Individual creators, you always had it, but as a company, I think very few, I mean, the legacy companies obviously did it, but there were very few new startups, right, trying to disrupt the way content is being served, especially financial content. And we did it with the Finshots in 2019, and Finshots was sort of a gateway for further expansion. And once Finshots did well, what we had was a massive group of young readers who are going to join the workforce in the next 1 or 2 years, so probably in the workforce, and looking to make their first big financial decision. Now that could be buying a home, that could be probably putting together an auto loan, or maybe buying insurance. And so our top of the funnel primarily comes through Finshots. We talk about financial content, we educate people about what's happening in the financial industry, and then we make a small plug to insurance, right, at the end of every story. And we also talk about, insurance on our social media platforms, etc. And if somebody gleans through it, they look at it, they're like, okay, I'm interested in what Ditto is. They go there, they book a call, and that's how we sort of, primarily our no spam model works, because we get high intent leads, right? People who love us as a brand, who love our content, and they believe that we'll do right by them. So that's our top of the funnel, and that's.
So what proportion of your website visitors are from Finshots?
I think right now, in terms of leads that we generate, I'm pretty sure it's still 30-40% of the leads that we generate on Ditto.
Which is the biggest single most source?
Yes, it's one of the biggest source.
And
right?
you said the sort of referral was the second.
The second source, right?
So Finshots being the first one, and sort of existing customers.
Yes.
So I know that you started your company as Finshots, actually as Finception, right?
As Finception.
As Finception, then Finshots, then Ditto came about.
Yes.
And in between you met Nithin Kamath,
yes,
right?
Yes.
That happened. So you couldn't have known in advance that Finshots was going to be your top of the funnel. I mean, content marketing today has become a thing, but back then, I'm curious, why did you start Finshots?
We actually knew that.
You did?
In the sense that we took our inspiration from Gwyneth Paltrow, the American actress, who started Goop as a newsletter, and then sort of started off as a newsletter.
But Gwyneth, every film star, Deepika even, right? They are their films first, and then they sort of diversify.
No, she had a newsletter. So she started off with a newsletter, and then she started a lifestyle brand on top, because she realized that there was a lot of readership there. And we were sort of inspired by that idea, and we felt like that if we use content as a funnel, we could always build something on top. The question was, what do we build on top?
Okay. So this was pre-planned.
Oh, this was planned right when we started Finception in 2018, right?
So that leads me now to your background. All of you are IIM Ahmedabad graduates, right?
Everyone except
okay. With the smart one. Okay, these IIM Ahmedabad people think they know everything. Okay, I'm just joking. So now that you mentioned this was pre-planned, I'm curious now. Was there anything in your sort of graduation itself, or in your learnings at IIM, that led you to this insight?
I would say it's the opposite.
Okay.
I mean, we had a lot of finance courses, and even after kind of studying all the courses, getting good grades, once we started looking at the financial news in this country, right, we are not able to make any sense out of it. Now you read any of the
after doing your MBA.
Yeah. So that was the first thing that before we kind of started out, right? Initially we wanted to be a stockbroking platform, right? And once we started doing a bit of research or reading all these news articles, we were not able to make sense of any of it. So that's where the entire idea of simplification, started for us.
This is, what were you reading? Times of India or Economic Times?
Everything.
Economic Times, Money Control, right?
Because Live Mint.
It was very hard to parse through some of the things.
But to be fair, I mean, the layperson does not read those, right? The layperson reads Times of India.
Precisely.
You self-selected the B2B newsletter. I mean, ET and Mint
and
stuff are meant to be for the industry, right? So they're meant to be full of jargon.
No, we felt like, so the original idea was to actually simplify stocks, not just finance, right? So we said that, look, if somebody wanted to get into stock market and just understand what's happening in Titan, they can't understand half these things, right? And we felt like the entry
But should they? I mean, is that saying to every person, you should go and understand how your body works, which you should actually, but also have the same information as what a doctor would have? It's not feasible, right?
No, but I feel the resources must be made available. For instance, if I wanted to aspire to be a doctor...
the doctors hate people who come with like Google sort of...
No, I completely buy from a customer specific...
People become hypochondriacs. They're like, I had this symptom, I must be sick.
Yeah.
So, I mean, is that what you're doing to...
No, but I feel like the resources must be made available, and you have to let people make their own choices, right? I felt like if you're going to exclude a customer base because you feel like you're going to gatekeep information, and that's never going to work. If we didn't do it, somebody else would do it, right? And we felt like stocks must be made more accessible. The idea of understanding stocks, not recommending them, because even if you look at Finception, the last line of every article would end with a catchphrase. We would say, fellow reader, where is your bet? Right? Because we would make it obvious to customers. We're going to lay out the facts. We're going to explain the financials as best we can. We're going to bridge it together with a very nice story, and so that if you read it, you feel like you're reading an article about a person, a living organism, right? And stock, much like that, I felt like was an abstract of a living thing, and we felt like we had to write those stories in a way that were more appealing, right? It's not the boring research reports you read from a qualified institution, right?
Actually, that in itself is interesting, that you're all sort of IM, and yet you had this creative side wanting to do it differently,
Only
right?
he has
Where
the
did that come from? From you?
When we started Finception, I just wanted to do storytelling. I wanted to write good stories, right? So every story would begin with a nice sort of introduction, and we felt like that's the best way to get people hooked, young people hooked onto the idea of understanding stocks. And you're right in that I feel like I was creative, but that wasn't because I was competent. That was because I was incompetent when it came to finance. I scored very poorly when in my post graduation degree. Right? My grades were terrible. I couldn't understand finance, which gave me an edge in terms of understanding not understanding what other people would do, and then I had to figure it myself. And once I had to figure it myself, undo everything, sort of lay it out, it became much easier for me to explain things as well. So in the early days, we would write one story a week. It was not scalable, and Bhanu and Pawan and Lokesh would focus on how to make something out of this, right? Okay, we have a subscriber base now. Can we do something on top, right? Can we build something on top? And so they were focused on that. I was just focused on writing stories with a couple of interns. And yeah, luckily it seemed that our writing sort of resonated with a large bunch of people. And then Nithin came along, and then we launched Finshots because we felt like stocks alone won't justify the kind of investment that we're making into content. We had to talk about more things, policy, economy, etc. And yeah, I mean, it worked very well for us after that.
So you met Nithin, and he said something along the
Nithin
lines
liked
of
the content that we were writing. So one of our videos went viral. Somebody from Zerodha saw it. They suggested
the Jet Airways one, something.
The Jet Airways one, yeah. So it was a silly little video. I mean, at the time we were really struggling. We weren't raising any money. Content was not a business that VCs wanted to invest in, and we had a monthly stipend from our college.
And were they right? Do you think? I mean, just talk about riff on the content business. Are VCs right not to invest in content businesses?
100%.
Right. So content does not make money.
It's very hard to make money.
Huh?
For individual creators, I think you can make money, but if you're building it as a business to scale, etc., I think it's a terrible business. And I think what we did was even more terrible because we didn't focus on video. We focused on textual content. Looking back, I know, I mean, it sort of worked out for us, but I think there's a lot of fortuity. I think we were very, very lucky in many ways, for content to work. Ideally, if looking back, what we should have done is we should have started with video, and we should have kept a very small, tight team, which we did, and we should have just focused on that, doubled down on that.
How would that have gone differently? You still, basically, content is the top of the funnel for you, right? So whether you do it text or video.
Yeah, I think it would have offered us more scale very quickly because it took us at least 3 years to build scale, right? And running a newsletter for say, I think we've been doing it for 4 years now, every day, writing one article a day, and doing it with a small team, keeping them motivated, making sure.
So how big is the Finshots team now?
Writing team is very small. It's just 2 people. I oversee. I make sure that I take the final call when it comes to putting an article out. I edit it. But yeah, it's just 2 writers that write the newsletter. Social media team is distributed between Ditto and Finshots, but yeah, another 2 people on social media, right? So it's a very small team that does all our content, but that's the only way it works, right?
So Finshots very clearly is your funnel.
Yes.
Why not just rename it to Ditto? Like, why call it something separate?
Oh, Finshots has it's a lot of brand equity, right? I mean, people love the brand, people like the brand. It's been free. We don't peddle other financial products. We don't do advertisements.
You've never done single affiliate marketing, nothing.
You
never made money in Finshots.
No.
Okay. And lucky you met Nithin, and Nithin said, okay, fine. Sorry. Yeah.
No, I think we started Finshots after meeting Nithin. So
you started after, right? So he gave you some money to start Finshots.
No, he gave us some money. He wrote it off. Basically, it was a write-off for him. He said, "I'm going to, give you."
It's from Rainmatter.
Yeah, it was from Rainmatter, and he said, "I'm writing this off because I feel like that you could potentially write content that will be useful to my customers." And at the time, we weren't writing customers that was useful.
Did that ever happen? Did he send out sort of an endorsement to his customers?
Oh yeah. I mean, Finshots initially
That's how you
achieved a bit of scale because we could actually advertise the product to Zerodha's customers, and that was our first customer base, right? I mean, these were people who were deeply interested in investment, stocks, etc., and they found Finshots to be a nice product.
So where is Finshots now? How many subscribers or regular
in terms
readers?
of the newsletter, I think we've tapped out. I think you could probably have about 1 million subscribers. So right now, I think on subscribers alone, we are at probably 600, 700,000, but we've not really grown substantially there, right? Because I feel like that's the market there. That's
plateaued out.
That's
maybe
plateaued, right?
a max of 1 million.
Yeah,
Okay.
I believe.
And
that
demographics of those readers?
A very young audience. I think our demographics is probably 22 to 28.
Which was kind of in your own sort of.
Yeah.
You were writing for your own peers.
Yeah. I mean,
Right.
that was sort of the idea.
Okay.
And
Mostly male. Do you have the
it's-
demographics?
Yeah. I think on
How do you
that
how do you track
30,
it?
70?
it's probably 25, 75, which is unfortunate, because what we were trying to do is we were trying to get more readership from the female segment as well, and we were trying to push, because it's a consequence of where you push your content as well, right? If I'm going to constantly push it in male-dominated institutions, for instance, MBA institutions, right? I mean, there's a disparity there, and we push our newsletters there. Obviously, we're going to get readers in the same proportions as well. So we try to figure out how do we actually reach out to more women. So partnering with companies that are already doing a lot of work there, but I don't think the ratio has improved considerably.
So today, your Ditto customers, surely at 20-something, you don't need insurance. You're still staying with your parents, or maybe you're still yet to get married and have kids, right? So, I mean, it doesn't add up. So where
it's
do you
25 to 35 at Ditto, but
Okay.
there is significant overlap, right? So, for instance, if you look at the actual age, I mean, although the primary group is between 22 to 28, then there's a secondary group between 26 and 35. So
for Finshots as well?
Yes, for Finshots as well, right? And so that is the group that actually goes and buys insurance. It's usually 25 to 30, I believe.
So the average age of Ditto customer is around 27. So
27?
27.
Oh, wow.
Yeah.
Okay.
So it's also got to do with, I would say, education of the users,
Right.
So through our newsletters, through social media channels, we educate them like what benefits you have if you were to kind of get into the entire insurance thing very early on. For a lot of people, for a 22-year-old, it's too early. But I would probably say that is the right time for you to get, because you're still very healthy.
Because they get the stepped premiums?
Yeah,
Right.
step premiums, and you're healthy and you'll get a policy, right? I mean, imagine you're diagnosed with diabetes, and all of a sudden you have to either pay higher premiums. If you have something else, some small heart condition, etc., you may not even get insurance, which becomes even more tragic.
Right.
And term insurance, it's way cheaper to get it at when you're 22.
So your average age is 27. That's the demographic up to 35. That's
Yes.
your Ditto customer,
Yes,
right? Okay. Talk us through CAC, customer acquisition cost, and lifetime value. So let's talk to your MBA jargon, fintech jargon here. What is your CAC? What is your LTV?
I wish I could.
So to be honest, we don't track.
Don't know?
No, we don't
really
track
do,
those
no.
numbers. To be honest,
I mean, the way we track it is I'm telling you, so the no spam approach works if you abandon the targets, if you abandon you can't abandon the CACs, but you must have some idea on where you're spending
So
your
roughly,
money.
give me a ballpark figure.
No, I would say we look at the number of referrals that we are getting.
Huh.
If, for example, if this month I'm seeing the referral percentage has dropped down, right now that's an indicator for me that something is not working well.
Right.
Rather than focusing on the CAC or the LTV, because the moment I focus on LTV, I will be forced to say, okay, today I got 100 customers, how many of them I'm trying to sell, right? Now again, it's a very short-term metric to look at. So what we look at is the total referrals that we are getting. If the referrals number is going up, which means we're doing a good job. If the number is
And what is it roughly?
referral number would be 30-40% again.
So around
30-40%
30% of our entire leads or
of the
sales
entire
of your
leads.
leads are from referrals?
Yes.
And how long do you expect them to keep as customers?
So that's
Persistency ratio.
Hopefully their lifetime, but
Yeah, so hopefully lifetime, but I think the industry average, at least for the health insurance, is around 8 years.
8 years.
8 years. For life insurance, it's much longer, because once you
But
take
if you transport them from one policy to another policy, they're still your customer, right?
They're
So
still
you-
our customer,
So hopefully they should stay for the rest of your life, no?
Yeah, ideally yes, but I mean different things happen, right? I mean, I think in our case it will be much more than 8 years, because our renewal rates are much higher than the industry average, etc. But one of the primary reasons where people don't renew is two things. One, they're moving abroad because we have a very young audience. They want to study, they want to move abroad, etc. They're not in India, so they can't renew it. That's one option. And the second reason is people have shifted companies where the new corporate plan offers much more cover, etc. Or where they want to kind of reduce the premium they're paying from their own pocket, right? So those are the only two reasons where we usually
From retail to corporate is not portable, but from corporate to retail is portal.
Like once you
Right?
have a corporate, it can be
Right.
ported back.
Right. Okay, let's talk funding now. So given that we talked some VC jargon, so you got funding from Rainmatter.
Yes.
Do you have any other external funders?
No. So,
And what sort of funding does it take to get to this level?
So initial funding we received about I think 4 crores from Nithin.
Is it like Finshots?
Yeah, this was to build Finshots and the financial advisory product, which didn't happen obviously. And then when we started building the insurance business, we tried to look at VCs. We tried to see if anybody would be interested.
You spoke to some other VCs?
Yeah, we spoke to other VCs because we weren't entirely sure if Nithin would fund us. Because Nithin.
Oh, you weren't sure, but
No,
even
no,
though you're
So back then, Nithin rarely funded any startup the second time.
Yeah.
okay.
we
So
were-
you started talking to other people.
Yeah. So we
Right.
went out and sort of we saw if.
How many
anybody-
VCs did you see?
We saw
Probably 10-15.
for 10,
Oh, yeah,
15,
10, 15.
Yeah, VCs we spoke
Okay.
to.
And did you do homework in terms of which VCs do InsurTech?
Yeah, I think we had a lot of inbound requests, right? Most people were interested by then to sort of look at us.
Because they were looking at Finshots.
Yeah, they were looking at Finshots, they were reading Finshots, they were seeing that we were trying to do something different, and we sort of laid out the plan for them, right? That
Right.
we were going to do insurance,
Okay.
here's how we're going to make money.
Right.
But obviously from a VC's perspective, they look at this and they say, okay, content is not a scalable business. You're getting into insurance where, I mean, it's a graveyard. I mean, look at the amount of companies that have tried to sell insurance online and have not
which all
succeeded.
did they mention?
I mean, one of the bigger examples, I mean, not succeeded, but I think many companies have tried. Paytm, for instance, has also tried selling health and term insurance. PhonePe is trying to sell health and term insurance, but again, the primary focus is on motor insurance now, because I think they've sort of recognized also it's much harder to scale that business. CoverFox was one of the bigger companies that has tried to sell insurance online, and yet all the founders have now moved on and
Right.
sort of, I mean, you look at that space and you're like,
Yeah.
this is not something
And
that
there's
we want
a
to.
bunch of other platforms as well, right? Insurance, Deco, and
Yeah, I think there's Turtlemint, but primarily offline. Insurance Deco also, if you look at the health and term insurance split, you'll see that primarily most of that happens offline, although I may be wrong, right? Based on what our understanding is, it seems to happen.
so these
offline.
VCs were basically saying, look at the graveyard of all these
Yes.
InsurTech platforms.
Yeah, and on top of it, the moment we said we are going to be an advisory first model,
Right.
we never
That's-
got a
yeah,
second
there's
call
no
from
scale.
Did they look at you saying, are you people like bunch of young people who
Yeah,
don't know what they're
and I
doing,
think
right?
for their point of view, it was like, look, we were saying things like we want to be a profitable model, we don't want to raise another round, this is it, etc. That's not going to work for VCs, right? I mean, it's never going to happen at the scale that we were sort of promising them. We were promising a 100 crore scale, right? I mean, in terms
100
of
crore
revenues.
top line.
A top line scale. I mean, that's what we thought was achievable. Obviously, now those things have drastically changed.
So what is your target now?
We don't have a target.
We
Still don't have a target.
Don't have a target.
Still don't have a target, but I mean, I think we could probably hit that 100 crore number very soon.
Probably the only target we have is to hire 250 people this financial year.
Out of 100, you have 120 now?
Yeah.
You want to hire another 250?
Yeah.
Right.
Yeah, and I think just to make sure that we offer a better advice, and all of these ideas flow from Nithin, for instance. I think even because he's a sole investor, we're accountable to him, and even during our conversations, I think last time we invited him to the town hall and we were talking about these things, right? What we want to do next year, etc. His immediate answer to that was, I don't think you should focus on any of these.
Right.
I think what you should focus on is making sure that you still abide by the values that you started with, right? And I think things will happen. And so far, things have been happening. I think he's been right. He's seen that and worked for Zerodha.
So he's a very good, I mean, I know he's a VC, but is he your mentor as well?
Yes, I think
It sounds like it, like you listen to him,
Yeah.
obviously.
Yeah, I mean, we
Yeah.
have great respect for him. In terms
Do you
of-
disagree with him at times?
Oh yeah. I think,
Like, such as?
one of the things that we disagreed with him initially was he wanted this to be a pure product play, right? He believed that scale would be very hard with individual advisors, and he was of the opinion, at least, that perhaps we should figure out ways to automate some of the processes, and we believed that was a terrible way to go, right? We didn't think that would actually work well, and obviously he agreed with us because he had given us free rein on how we wanted to build a business, right? So we built the business, and I think now he's I think there's some consensus that this is perhaps the better way to build business,
Right.
have advisors.
So how much money did you end up raising? That's
So
the-
initially we ended up raising 4 crores, and we couldn't raise money from VCs because everybody first meeting and then that's it, right? No scale, no vision, no ambition, and all that. And I agree with that, right? If I were a VC, I would probably do the same thing. And then Nithin, obviously, again, for some reason, he saw something in us, and he decided to set aside another $5 million. And he said that, okay, you can use this to sort of build the insurance business. That was our early projection, but once again, once we started doing insurance, we realized that was perhaps also not needed. Like you could probably build what we did with just maybe 2-3 million, I suppose, right? I think it's easily doable, and scale, through internal accruals, right? You don't have to rely on outside funding. Obviously, that means not growing at a scorching pace. That's sort of the sacrifices. There are sacrifices that must be made, but I think it's easily doable. I think it's
and you burned through that funding already,
No,
or
no.
you still have it? That's why you're saying that's why you don't need that much. So talk profit. I mean, when will you achieve profitability if you haven't already?
we are profitable.
You're profitable.
Yeah, we're
right.
profitable already.
Right.
Now
Okay.
the question
and
is the
and
quantum of
Rainmatter
profit.
is a majority shareholder.
Yes, right.
They're the only external shareholder.
Yes, they're
Only
the only
So there are four of you, four
Yes,
founders.
yes.
And how much do you give in terms of ESOPs?
So we have a 5% ESOP.
ESOP.
Okay.
Yeah,
Okay.
5% ESOP pool, and we are equal founders.
Okay, so let me now throw it to you. We have AI, ML, quantum, we have all kinds of tech available. If given a free rein, I don't see why you wouldn't get a free rein, but if given a free rein, how would you, I mean, I know it's putting the cart before the horse, but would you use any of these technologies to make your product better?
I think we do kind of opposite. I mean, we do exactly like we don't care about what technology we use, more about this is the business problem that we try to figure out, and if we have to use AI, we'll use that. If not, we'll just use
Do you use AI right now?
We use for the transcription. So the quality team
For the
usually have to listen to all the calls, audio calls. Right? That's taking a lot more time.
But that's a plug and play. You can buy a ready-made product
Yeah, I mean, pretty much.
plug it in,
That's
right?
it. So otherwise,
But is there anything that you do in terms of applying on your demographics,
No,
on
nothing.
data, on
No.
top of the funnel?
we don't really even track a lot of data to know so much about the customers because we don't really believe that we can do a lot with the data. And even if the marketing team wants and comes there, I want to track this data, right? And we ask them immediately, okay, tell me what exactly are you going to use this data for?
You know,
Can't do
there are
this.
AI firms now that can look at your audience and do a lookalike audience so that you can actually
So
build more.
we don't advertise. So
You have a Zerodha policy. is it?
Yeah, exactly. So,
Right.
I
Okay.
mean,
Yeah.
we do partner with sort of people who we believe share the same values or who use our products, right? So, for instance, if we find there are affiliate partners that we could work with on an advertisement basis, right?
Right.
We do advertise, not in the traditional sense. We do.
This is influencer marketing.
Influencer marketing.
Which may or may not be allowed anymore, although that's a SEBI thing rather than an
that's a
IRDA
SEBI
thing.
Yeah,
Right.
IRDA thing. I think.
What do you think of that? What do you think of influencer marketing?
I think if you're throwing that kind of money, you're going to get abused, right? I feel like I think at this point, when it comes to influencer marketing and because we've also partnered with influencers, we've seen the way the market mature. Right? You're talking about crazy money for a single integration, for instance. Just talking about a product, which is why we've been very selective with the kind of people that we work with. Right? We only wanted to work with people who've tried our service, who can vouch for the product, who can vouch for the service, and we've also been very clear about the kind of money that we will allocate to this program. So even if influencers were totally cut off, I don't think that would make sort of a massive difference for us because we have our own sort of channels where we bring in most of our customers. But fundamentally speaking, I think SEBI's regulations by and large I think are welcome. Because I feel like otherwise you're going to have this perverse incentive to keep peddling products that and we were a content company, right? So the amount of and because we were one of the more trusted brands when it comes to financial news, etc. Almost every brand would reach out to us, right? Every marketing agency would come to us saying, "This is what we can promise," and the kind of money, I'm pretty sure it was ludicrous money at one point.
we could have turned profitable 2 years ago.
And why didn't you?
We felt like that would be betraying our customers' faith, and I know that that's not a thing that you hear often, but we felt like, Ditto, the name comes from the idea that we would do the same thing that we would do right by customers in the sense that would do if I were in your shoes, right? Skin in the game.
Yeah, I meant to ask you that. Where does Ditto come from? So Ditto is what you would do.
Yes,
for yourself.
For yourself, right? So it's Ditto. We do the same thing, and so the first thing that we did is once we partner with insurance companies, we bought those policies, right? Each one of us, we made sure that we had skin in the game, right? If something goes wrong, then we are sort of accountable as well. So we partnered with 3 companies. Each one of us bought a policy from 3 different companies, right? And we've stuck with that, right? We've stuck with that idea,
And that's your primary cover.
That's my primary cover, right?
So it's not a backup plan.
No, it's not a backup.
So just on that, I mean, so say for example, you're working with these companies and some other insurance company comes up with a better product.
Yeah.
Would you then have to dump one of your companies to go to that better insurance company?
So not totally. So the way we partner with is, even if we partner with one insurer, we don't distribute all of their products.
Right.
We are very selective in terms of in each cohort, which product is the best in the industry, we go ahead with that.
Right.
Now, we are working with one of the partners who was not there with us when we started, right? And then they launched a new product which we felt was much better. So we kind of changed one partner for the other. Right? So depending upon which cohort and which segment you're talking about, we decide these things as per that.
Right. Okay. Speaking of that, so ambition, you're sort of saying you don't have targets and stuff, but given all the problems we talked about in the insurance industry, would your ambition maybe perhaps think about starting an insurance company?
I think
If you think that is a problem area. Okay, so we're sitting in India. If you've done the right thing by the customer, but at the moment the number of customers you've influenced is probably very few compared to how big India is, right?
Yeah.
And I'm just curious, are you interested in the India 2, India 3, the Bharat? And if so, how would you get there?
I think for us it's a top-down approach, in the sense that I think it's incredibly hard to build a business in India 2, India 3 and then scale it up. Whereas I believe that it's much easier to be profitable with India 1 and then perhaps see what you could actually do with India 2 and India 3. I think that's a much more sustainable approach without actually, considering somebody like us who's not raised a lot of money, right? I mean, there's absolutely no way we are going to make the economics work if we immediately just go down to India 2 and India 3. And I think our larger objective is just that, right? How do you make sure that you build a sustainable business that's trustworthy enough to then venture into other products or venture into other domains or venture into other demographics where we can actually make an impact. So insurance company, for instance, the question that you asked, I think perhaps in the list of items that we want to do, I think the first few things are just trying to do all the financial products that we can actually sell to people outside of health and life insurance. And there are some products that we won't sell. For instance, we don't sell endowment and ULIP products because, like the name Ditto suggests, that's not what I would do if I were in your shoes. And we've not sold those products. We don't intend to sell those products. But there are other products that I believe that we could potentially sell.
Such as?
Right now, I can only think of a few. For instance, I think again, in India 1, credit cards is one thing. I'm not sure about the market. I'm not sure if we'll do it also. But I feel
it's very crowded.
It's an extremely crowded market, right? I mean,
not only credit cards, but credit card advisors.
Advisors, right? Making sure that you pick the right credit card so that you can actually save money. For instance, I have a credit card. I'm pretty sure it's not optimized, and I feel
but
like
does it need to be? Does everything need to be so optimized? I think a little bit of slack is good in life, no?
No, I mean, if someone else is doing it for you, why not? I mean, if you are spending so much time on optimizing everything, probably it's a waste of
But there are other
resource.
things within insurance you could do. Like we were talking about within insurance, disability insurance, income protection is something that I think most of India doesn't even know what it is. Very few insurance companies offer it. So could you work with insurance companies to develop better insurance products?
Yeah. I mean, I think that's something that we're constantly trying to do. For instance, even within term insurance products, if you look at the past 5-6 years, you'll see that there's been a lot of innovation, right, in terms of the add-ons, etc. Now you do get permanent disability benefits. You do get benefits when sort of you're diagnosed with a critical illness. The lists have increased, right? So earlier you'd probably get some benefit if you were diagnosed with 6 critical illnesses, 12. Now it's 36. Some even offer 60 critical illnesses, and so there have been improvements, and there have been improvements by virtue of agents and corporate agents like us sort of talking with insurance companies and seeing if we could do something. Income protection as well, right, as an add-on to term insurance products, we've already seen that happen. So I feel like this innovation will happen as a sort of a subset to the term insurance products. I think individual products, just customizing each product, again, it's probably hard because it's very hard to acquire a customer. It's very cost intensive, and then you're selling a plan that probably doesn't compensate for the cost, right? So you have to focus on what kind of economics work for the products that you're selling, and then you have to make sure that you add the greatest benefit to the people, which is through add-ons, right? I feel that is a more sustainable approach than just selling these plans individually.
Any thoughts on embedded insurance? I mean, I know there's kind of general insurance being sold in travel and every trip and things like that. What about health and insurance, health and life? Can these be somehow embedded into I don't know, any other, I mean, we started the conversation with NPS perhaps, but there's not enough NPS takers also. But where do you think innovation could happen in that space?
I feel like when you talk about health and life insurance products, just health and life, I don't see how embedded products would actually work, because it's a deeply personal investment. And I call it an investment because it's an investment in health and life. And I feel like if you listen to the conversations that our advisors have with customers, these are very intimate, personal conversations, right? These are not conversations about just the product. These are conversations about their life, about their health conditions, how they see their family dealing with the future if they weren't here. Right? I mean, these are intimate conversations that I don't believe you can sort of simply embed in a product flow. And I feel like it's much harder to. I'm not saying that somebody couldn't do it. I'm saying that from what we've seen, right, in terms of what customers actually want. In fact, early on when we just started the insurance business, we had no experience with insurance. That's one of the reasons why VCs passed on us. I had no experience building anything with insurance, so they said, okay, I don't trust this. And so we decided that we were going to sell insurance. Each one of us, all the founders answered calls, and we did that for about 2 or 3 months. Some of my customers still call me, and I make sure that I still act as an advisor to them first. So when we have these conversations with customers, I think we quickly realize the pattern, right? I, for instance, would explain 30, 45 minutes about the product, everything, right? Whereas Pawan would just sit there and he would explain the product. He would probably spend about 10, 15 minutes. And then the next 10, 15 minutes would be assuaging the customer. He would say, bye, main hoon na. Right? I mean, that's how sort of the customers, conversations would go.
You can't build a business on an individual being saying main hoon na.
I feel like that is how insurance has to be sold. If you're going to sort of, and that's why insurance has been so successful. I think the agent network has not just been successful because they reach out to their family and friends, because they're using the same tagline, main hoon na, right? And that's why insurance has been so successful. And I feel like that's what we're trying to replicate in the online space as well. And that's not just a tagline. I think for us, when it comes to claims, for instance, that's a place where you have to be there for the customers, right? And for us to do that, we have this, this integrated approach, right? So when a claim comes through, the insurance company doesn't immediately process the claim. One of our team members will get on call with our SPOC at one of the insurance partners, and we'll have a massive conversation, right? If we believe that the claim is legitimate, no fraudulent, no non-declaration, none of that. And if that doesn't work, immediately there's a mail that goes out to the grievance cell. Right? And if that doesn't work, we go to the insurance ombudsman. Right? So we've gone to the insurance ombudsman maybe 6-7 times now, and each time I think we've just come out being victorious, because insurance companies don't even want to represent the case because they know they're in the wrong, right? So we go the whole 7 yards, because we feel like you have to be with the customer throughout this journey, not just when you're making a sale. And I think that the embedded aspect of it would sort of skimp on many of these details, and I feel like that would probably not lend to a very satisfactory customer experience.
For the customer to feel confident that their claims will be sort of processed when they actually need it, when they will have no time to kind of run around, they have to be convinced that you'll be around. How do you give them that commitment?
I think that's one of the things, one of the reasons why we've not raised and burnt exorbitant sums of money, and we're not focusing on growth, right? The idea is sustainability. If we can't make the economics work at this scale, we'll not be able to make it work at 5x the scale, because it's people intensive, right? So we've aggressively focused on making sure the economics work at this scale so that we can be around for 5, 10 years, 15 years. Now let's suppose in the off chance that we are not around, right? And the insurance contract still holds, right, with the insurance company. Obviously, even if we weren't around, the customer still has recourse, right? They can still, file complaint with the grievance cell, they can still go to the ombudsman. Just that it becomes a lot more easier when Ditto is around, because we'll sort of tell them what to write, who to mail, etc. But the premise is that the contract is between the insurance company and the customer, and hopefully in a few years the regulator also will be more proactive in making sure that customers' rights are taken care of. And we're already seeing examples of that, right? The regulator making sure that they clearly define what each term means, right? Pre-existing disease, etc. That was an innovation that wasn't there 10 years ago, right? Now everybody knows exactly what daycare treatment means, so that insurance companies can't play hard and fast and loose when it comes to certain terminologies, etc. So I think the primary objective for us is to remain sustainable, so that we're around for the next 15, 20 years. But even if we weren't around, I think customers don't have to fear a lot, because the contract still exists between the insurance company and so.
That leads me to the question of direct selling. Do you envisage something like that happening for the insurance industry?
So it's kind of happening right now, but not really at a very high momentum, I would say. But I think at some point it may pick up, but very hard to do that. The top 3-4 companies do it for 1 or 2 policies that they have. Like if they have 10 policies, they don't give direct option for every policy. One of those top policies, etc., they do and kind of have it there.
Let's change gears a little bit and wrapping up. You are on your first startup, I guess, if you count Finshots and Ditto as the same. Life will change and you may want to do other things. What is the org structure today, and how do you ensure that the company stays when people actually need it for claims many years down the track?
Yeah, so Zerodha is the only investor, and then it's the 4 founders. So the primary custodians, involve just the founders and Zerodha, right? Zerodha is, even if the founders aren't around, which is not what we want to do. We want to sort of be in this business and sort of build more products on top, right? Build more things around the Ditto brand, because it's a brand. It takes a lot to cultivate trust within a brand, and I feel like we could probably leverage it even more, and we want to stay in the business. But even if we didn't stay in the business, I believe that Zerodha is a very good custodian of customers' sort of faith, and so I feel like that's something that I don't think customers need to worry about a lot. But yeah, that's our organization structure. Very simple, 4 founders, and it's just Zerodha. Yeah.
Okay. Let's just sort of wrap it up, and maybe quickish answers if we can give. What you've built a company from scratch, right? What advice would you give to other people building from scratch?
I think just doing right by customers. That's how we build a business, and I feel like if more people did that, I think we would have a much better startup ecosystem than we have currently. I think chasing valuations, etc., makes a lot of sense when you're young, etc. But as I've seen the industry mature, we started in 2018 at the height of the startup funding boom. We didn't get any money, and I think that sort of experience has taught us that doing right by customers, you can still build a modestly sized business, and you can do it well.
On the tech side, building from scratch, what would you change now?
I think kind of relying on the open source. So most of the things are already kind of built. Kind of rely on more on that than kind of trying to build everything from scratch. That's one thing. And also kind of be brave enough to use things. You don't have to pay for every service, etc. Because if you want to run a lean team where you kind of have control, better to kind of have it. And there are a lot of things you can maintain.
You are training advisors from scratch. Any sort of learnings from there?
I think you have to.
How to deal with a 22-year-old when you're building a career for them?
No, you have to be a bit more patient with them. You need to give people, some time to get into the entire, system, understand things, how various things move around. Right. Oftentimes, startups have this hire fast, fire fast model, right? Which may not work out if you want to build something in a sustainable way.
What's your advice to VCs? Now, having met so many.
I don't think I have any advice for VCs. Like I said, I think VCs were right in their assessment of the company. Right? They're looking for these asymmetric bets, right? Where the payoffs is extraordinary, and I don't think we were a company that was extraordinary in that sense, at least. I wish there were more VCs like Zerodha, for instance, that actually had other objectives outside of just making money. And I know it's counterintuitive. Obviously, VCs they're accountable to their limited partners, right? They have to make money for them. But I still feel like if people with wealth, like Nithin, for instance, decided to perhaps use slightly different metrics on evaluating companies and startups, we would have a lot of companies that make an actual impact. That's not to say that the traditional model doesn't work. It's just to say that perhaps we would have a lot of differentiation in terms of the kind of value. Because I don't think a content business like us would ever have scaled without Nithin's help, right? And that only happened because Nithin did not have the ulterior objective of just making more money off of this. He wanted to have a sustainable business that could actually impact people's lives. We've always felt like there's been no pressure from the Rainmatters and to actually achieve targets, to build something a certain way, and that's given us the confidence. Also to build a certain way, because VCs can traditionally steer you towards a certain direction, and none of that happened, right? As an investor, I think they've been exceptional, and hopefully we can sort of reward their patience and their belief in us as well eventually.
Any other mistakes, any other regrets on this journey?
Oh, so many.
Let's hear them. Quick round. Lokesh, you go.
Yeah. I don't know, I think we always kind of get into things without fully knowing the picture. We get it and then figure out what happens.
I did not know young people did that.
We do that, I think, more often than not. I think that's one thing. But I don't know, I don't know if we would really regret about that. I think that's the only way we know about it, I think. Okay,
so you would advise young sort of MBA graduates to start up or not?
No, I don't think that's a good MBA graduate. I mean, if you have an education loan, I think it's a terrible idea, because you're not going to be able to fully involve in your startup, because you're constantly thinking about what ifs, right? What if this happens? What if that happens? Luckily for me, I didn't have to. I mean, I was very privileged in that sense that I didn't have to take care of my parents, my family, etc. But if I did, none of this would have happened, and that's true for all of us, right? We weren't sort of, our parents or our family wasn't as dependent on us as some other people, my peers. So I feel like right after MBA, if you have an education loan, perhaps it's best to take a couple years. And when you're doing it, you do it with a lot of passion and intent, and you have some savings, right, for a rainy day. Perhaps that's a much
Maybe that's
approach.
another area you can go and disrupt, education loans. Okay, on that note, thank you very much. Thank you for making the time. And we sort of loved hearing your stories on how you did things from scratch. Thank you.